So, you've sold something valuable, maybe some shares, a bit of property, or even crypto, and now you're thinking, what about the tax? Don't worry, you're definitely not alone. We're about to break down exactly what capital gains tax means for you in the 2025/26 tax year. Let's get you clued up.
Oh, you know that feeling, right? The money from a big sale finally lands in your bank account. It's amazing. But then that little voice starts whispering in your ear, "Blimey, what about capital gains tax?" It's that nagging dread of a surprise bill from HMRC. Well, today, we're going to shut that voice down for good.
And look, to make sure you're getting the best info, we've teamed up with the experts at My Tax Accountant. These guys have been in the game for over 18 years, so they really know their stuff. They've helped us put together this guide to make sure you can navigate all this tax stuff with total confidence. Okay, here's a quick look at what we're covering. First, we'll tackle that nagging question about what CGT is. Then we'll get into the all-important numbers for 2025-26. After that, we'll show you how to calculate your gain. We'll talk about those deadlines you can't miss. And there's a special section just for business owners. And finally, we'll tell you exactly what to do next. Right, let's dive straight in. First up, that nagging tax question. What exactly is capital gains tax? And do you even need to worry about reporting it? Let's figure it out. It's actually pretty simple. Imagine you buy an asset, let's say a painting, for 10 grand. A few years go by, its value shoots up, and you sell it for 15 grand. Boom, you've made a 5,000 pound profit. Capital gains tax is just the tax you pay on that 5 grand profit, not the whole 15 grand sale price. It's all about the gain. So, you've made a gain. Great news. But does that mean you have to immediately start wrestling with tax forms and telling HMRC everything? Well, hold on, not always. The rules are actually pretty specific about this. Okay, listen up, because this is super important. For the 2025/26 tax year, you absolutely must report your gains if one of two things is true. First, if your total profit is more than the 3,000 pound tax-free allowance. Simple enough. But here's the one that catches people out. You also have to report if the total amount you sold the assets for is more than 49,200 pounds. And get this, that's true even if you made no profit at all. Why? Well, HMRC basically wants to see the paperwork on any big transactions, just to make sure nothing's being missed. Okay, so now you know whether you need to report it. Let's move on to the next big question. How much are you actually going to have to pay? Let's get into the key numbers for 2025/26. Right, first things first, everyone gets a 3,000 pound tax-free allowance. It's called your annual exempt amount. Now, heads up, this has been slashed recently. It used to be over 12 grand, so this lower limit means way more people are getting caught by this tax. But here's a little pro tip for you. You can't just give your allowance to your partner, but you can transfer the asset to them before you sell. That way, you can both use your 3,000 pound allowance, effectively sheltering 6,000 pounds of profit from tax. Smart, huh? So what about the tax rates? Well, for most things, think shares, crypto, that kind of stuff, it's 18% if you're a basic rate taxpayer, and it jumps to 24% if you're a higher rate taxpayer. Now, for residential property, it's a little different. It's still 18% for basic rate and 24% for higher rate. The key is knowing which bracket you fall into. Stay with me. The next bit is where you can really save some money. Okay, we've got the allowances, we've got the rates, but how do you actually work out your gain? Let's walk through the calculation step by step. This is how you make sure you don't pay a penny more in tax than you have to. It's a really simple formula, just 5 steps. 1, start with what you sold it for. 2, take away what you originally paid for it. 3, and this is a big one, subtract any allowable expenses. We're talking about stuff like solicitor's fees, stamp duty, even platform fees for crypto. 4, deduct any tax reliefs you're eligible for. And finally, 5, subtract your 3,000 pound allowance. Whatever's left, that's your taxable gain. Let's make this real. Take Sarah, a freelancer from Bristol. She sold some crypto and made a 7,000 pound profit. After her 3 grand allowance, her taxable gain was 4 grand, and her tax bill was 720 quid. But she nearly forgot about the 200 quid in platform fees she'd paid. By remembering to deduct a bat, she knocked 72 pounds off her bill. See? Every little expense counts. That's not all. Here's where most people go wrong. Okay, working out the numbers is one thing, but reporting it and paying it on time, that's the other half of the battle. And trust me, you do not want to get this wrong. The deadlines are super strict, they're different for different assets, and you'll get hit with penalties if you miss them. And this is probably the most important deadline to remember.
If you sell a UK property, you are on the clock. You have just 60 days, that's 2 months, from completion to report it and pay the tax. 60 days. For pretty much everything else, like shares or crypto, you've got loads more time. You just report it on your normal self-assessment tax return, which isn't due until the 31st of January the following year. Seriously, do not forget that 60-day property rule. It'll cost you.
All right, I want to talk directly to the business owners watching now. If you're thinking about selling your company, you need to lean in for this next bit. There's a huge tax relief that could literally save you a fortune, but only if you know about it. Now, what's really interesting here is
The magic number here is 14%. That's the special capital gains tax rate you could pay instead of the usual 24%. It's thanks to something called Business Asset Disposal Relief, or BADR. To qualify, you generally need to be selling your trading business, have owned at least 5% of it, and have been involved for at least 2 years. There is a £1 million lifetime limit, but here's the kicker. This special 14% rate is set to go up, so time could be of the essence.
And if you want to see just how powerful this can be, look at this case study for Emma & Co. Emma was selling her business for £4.8 million. The initial tax calculation, a jaw-dropping 1.1 million quid. Ouch. But by getting some smart advice from my tax accountant, they did something simple. Before the sale, she transferred some shares to her husband. This meant they could both use their £1 million BADR allowance. The result? Their final tax bill dropped to just over £368,000. That's a saving of over £730,000. Incredible, right? And this brilliantly illustrates the value of getting advice.
wow. Okay, we've covered a lot, haven't we? From the absolute basics right through to some seriously powerful tax-saving strategies. So let's pull it all together and talk about your next move, turning what you've learned into action. So if you take away just 3 things from this, let it be these. 1, know the numbers, that £3,000 allowance and the 18 and 24% tax rates. 2, selling property, remember that 60-day deadline. It's non-negotiable. And 3, if you're a business owner, you have to look into that 14% BADR rate. It's a real game changer. Look, I get it. We've thrown a lot of numbers and rules at you, and it can feel a bit overwhelming. Everyone's situation is different, and it's totally normal to still be a bit unsure about your own specific circumstances. And that's okay. But getting this right is so important. As we saw, it can save you 70 quid like Sarah or over 700,000 quid like Emma. This is definitely not something you want to leave to chance. So if you want that peace of mind, the best thing you can do is talk to a professional. The team at My Tax Accountant are the experts. You can reach out to them for some personalized help. Their number for WhatsApp and calls is 07854 25375. Or you can just send an email to info@mytaxaccountant.co.uk. So I'll leave you with one final question. What's the one step you can take today to get your tax affairs sorted for tomorrow? Maybe it's just saving that number in your phone. Whatever it is, acting now is what gives you peace of mind later. Thanks so much for joining me, and for more great tax tips, make sure you hit subscribe on the My Tax Accountant YouTube channel.